Okay, so learning objective 5 basically takes a look at the ledger. Remember, when you look at a ledger, um, and you saw it just a couple of pages ago, right? When you look at a ledger, you have all these accounts, and you'll notice that every single account has a balance, either on its debit or credit side, right? Well, if you did your accounting well, these all the debit balances and all the credit balances will equal. And so a trial balance basically is a quick little financial statement that lists the accounts that we have in the ledger. All these accounts come right from that ledger sheet that I just showed you. Okay. We simply list the accounts. And the accounts are either going to have a debit balance or a credit balance. So wherever the balance is, this is where you put it in the debit column if the account has a debit balance. If the account has a credit balance, you put it in the credit column. And you simply add up the debit balances and add up the credit balances, and voila, they should equal. So if you've done everything correct and your balances in your ledger are correct, you simply are listing the accounts, listing those balances, and adding them down. The accounts that have the debit balances, like the asset accounts, right? The dividends account, the expense accounts, adding up all those debits will equal all the balances that have all the accounts that have credit balances, like these liability accounts, the common stock account, and the revenue account all have credit balances. So simply list the balance from the ledger that we just did, and it should equal. That's a trial balance. Not much, not much here. So and your book has a do it exercise here that basically they don't actually give you, they give you the accounts, they don't actually give you the ledger. Normally, we would be able to look at a ledger and see what the order of accounts is. It's usually given to us, so it's not that difficult. Um, but in this particular exercise, they give you the accounts and ask you to sort of put them in order. Well, the order would be what we mentioned earlier. The asset accounts would be listed first in the order you'd see them on the balance sheet, classified balance sheet, right? So cash is certainly going to be listed first, right? Your accounts receivable is also a current asset that would be listed. Your looks like your prepaid insurance is also a current asset, so that would be listed. So your current assets are listed there. And then are there any more assets here? Yes, there's equipment. So your equipment account. So all your assets would be listed in that order: cash, receivables, prepaid, and equipment. You would put all those on the trial balance, and each one of these balances would show up in what column? Well, what balances do asset accounts have? Debit balances. So each of these numbers would be on the debit side of the account, so they'd be listed in the debit column. Then you would list your liability accounts next. So your liability accounts would include your notes payable account, your accounts payable account, and your salaries and wages payable account are all liabilities. Normally, your notes payable would go first, your accounts payable second, your salary wages payable third on a traditional balance sheet. So you would put those there. Now, these balances that you show here are balances in these liability accounts. So where would the balance be? What side would it be on? It would be on the credit side. So these balances would go on the credit column. Then you would have your common stock account. Again, this is a balance on the credit side. Then you would have your dividends account, which would be on the debit side. Then you would have your revenue account, which would be on the credit side. And then you have two expense accounts. Both of these would be on the debit side. So once you kind of figure that out, it will look like this. Okay. All your accounts are listed the way they would normally be listed on the balance sheet and on the ledger. If the account had a debit balance, you put the number in the debit column. If the account had a credit balance, you put it in the credit column. You add them up, all your debit balances equal your credit balances, and you're done. So you've done all your accounting correctly at that point. And that's just sort of a piggyback on the ledger. Questions?